Hey guys, it's Ricky here over at True Trader. I'm about to show you guys how I personally prepare for earnings trades. This is the earnings webinar. Alright guys, so the reason that earnings are important is because they provide us a unique opportunity, because you're going to get heightened volume, liquidity, and range in names that are very attractive to trade in the first place. Not only that, but historically, most large moves begin from a catalyst such as earnings. So even though a lot of stocks are going to become more attractive when they report their numbers, there's still some minimum criteria that things need to meet. So let's get into some of those things. The first is going to be liquidity. I typically look to only be interested in stocks that trade $1.5 million to $2 million per day, and I like to see even more than that on earnings. Now, if you're looking at average volume, depending on what platform you use, you should be able to tell what the typical volume is. If it doesn't tell it for you, you can just look at the volume candles. You should be able to get that information. But if something only trades 1.5, maybe less than 2 million a day, it doesn't necessarily mean it's off my list. I need to go and look at what it typically trades on the days it reports earnings, because like I said, it's going to trade more than usual, okay? At least in most cases. The next criteria something needs to meet is range. I don't usually trade things that trade under 1.5 ATR. ATR is average true range. Basically just the high to the low of the day, like how much does a stock move. Obviously, the more something moves, the better for us as day traders, because there's bigger pieces to take. So if something only trades like in a 50 cent to a $1 range, and we're talking a $30, $40, $50 stock, I'm not interested in. So I have ATR on my charts right here. It's the little red number. It's also represented in the volume pane as a like a line chart. So you can see, obviously, it fluctuates too. So stocks will have times when they compress and range isn't very big, and you'll have times when they break out and range expands. But I need something that trades at least 1.5 ATR. And again, just because it doesn't trade 1.5 ATR or higher doesn't mean it's off my list. I need to go and look at what kind of range it actually trades on days where it reports. So once those two minimums are met, that is what allows me to justify putting it even on my field of view. The next thing I always look at is the daily chart. And why is that? Why do I look at a daily chart? The reason I look at daily charts is because it helps me answer one very important question. Is this a stock where my bias should be to join the trend, look for continuation, either down or up, right? Or am I going to try to fade the move, meaning a spike gets shorted or a flush gets bought? Those concepts can be a bit nuanced, but they're extremely important. And I want to use some examples to kind of illustrate that, exactly what I mean. So what we're actually going to do is take a look, last Sunday prep that I put out, which was here at truetrader.net blog. You can find all the historical content we've put out as far as like the midweek watches and the Sunday preps. So this was last week's. And I want to just use a few examples from this one to highlight exactly what I mean about using the daily chart. So the first one I want to draw attention to was the AMC idea. And so AMC, if you read what we wrote about it, it's basically saying that the chart's broke and that any pop off the numbers is probably a gift for a fade. I'm not sure if I click on this, if it takes us to the chart prior. Okay, so it does. This is nice. So it shows you the chart prior to the earnings coming out and the idea actually laid out there. But let's go and look at AMC. And what happened? It gapped up into resistance and it was sold off. Now, compare and contrast that to the idea on U, which I think I can just scroll down and we'll get there. Yeah, it's right here. So U says, and let's see if we can show the chart too. Here was the idea on TradingView. We like to publish the idea so it's not hindsight, right, guys? Basically, the over-under. And I would 115 was the level. It was the 200 day, I believe, and it was also a monthly pivot, and it was also prior resistance. And as you can see, it was just, I have it drawn out here, constant trouble with that level. But it's just going sideways. It's a 6-month base. I love when stocks build long bases, 6 months, 9 months. The longer the better, because then when they finally break out of those bases, the moves actually are sustainable and usually have some follow through. So basically the idea was over 115, I'd like to get long on dips back on that name. So do you see the difference between those two daily charts and why one of them is a no-brainer short when it pops into levels, and the other one is like hands off, a little bit of caution, maybe even look to join trend. It's night and day the difference, right? Now, one of the things I want to point out is that just because something's breaking out doesn't mean it's going to work. And it doesn't mean that you can't fade that and make money. You can. Breakouts often fail. But what I want you to do is this quick little exercise. Go stand in the mirror and say this. Repeat this a few times. Look in the mirror and say, my name is, say your name, and I make money by shorting strong stocks breaking out on earnings. And keep repeating that. And it shouldn't take too long before you realize how stupid that sounds. Okay? It's all about taking the higher probability. Which way is going to be the path of least resistance? So on Unity, I mean, you can short this stock anywhere up here, and it could work, right? It could, but should it work? This is where we always talk about dealing in the realm of should versus could. I only want to put my money at risk when something should happen, not just because it could. Could it fade from a breakout like that? Of course it could. But again, is that what you want to tell people in a 15-second elevator pitch, what you do when you trade? I short strong earnings breakouts, breaking out of a 6-month base? Come on. So that is the importance of using the daily chart to pretty much tell like what your bias should be. So we have liquidity, we have range, and we have the daily chart to kind of get our bias correct. Okay, so moving on, let's look at some examples of some upcoming earnings we have. Roblox. Now, here's the other thing I want to point out is that it's much better to try to do your preparation for earnings right into the numbers coming out, like a day or two before, because we really need to know where we're trading right before the numbers come out. So like, yes, I'm not doing these in the Sunday prep anymore, and a lot of the times what would happen is I'd have earnings come out on Thursday, but I'm trying to make my plans for it Sunday, right? And we don't know what's going to happen Monday, Tuesday, Wednesday, heading up into those earnings. So a lot of times it was like a bunch of work for nothing, right? Because the idea would have to be scrapped because it trades up into the area I was looking to play it against prior to the numbers even being released. So it really helps to just do your prep a day or two before those numbers come out. So what I'm going to focus on is like some of these earlier names for making plans for this week, but then we're also going to look at some daily charts and some later this week. If you're watching this at a later date, this was filmed for the week heading into August 16th, 2021, just to give you guys clarification on that. So if you're wondering what week of earnings we're talking about. Roblox reports, I think it's Monday after the bell. I have it written down. Yeah, Monday after the bell. So we can kind of assume that it's probably going to be trading close to this, 80 to 87 range, somewhere in here. It's not a guarantee if Monday has a big move moving into the earnings, sometimes the plans do have to be adjusted. But we can kind of assume that it has a high chance of trading in these areas. So from there, we can say, okay, what's the liquidity? They trade on average 4 million shares a day. It's going to be even higher on earnings. That's great. What kind of range does it have? The ATR is currently 4 points. 4 points of range. And you can see like these aren't even some of the wide range days. Back when it was making big moves, it was trading six points a day. So the range is there, the liquidity is there, the daily chart. What's the daily chart say? Is this a breakout of any sort? Is there any reason to think that that a big gap up is going to have continuation, or is it more likely that a spike into a level may be a good fade? On a name like this, now granted, anything could happen, but what should happen? Well, let's say we gap up. And it puts us right into maybe this 94 area. You see some prior tops there. That's going to be a pretty decent sized gap for this name. It's going to be a pretty big percentage gain for this name, and therefore, I really think that it's going to be hard for it to continue past that without at least giving a nice little fade. So that would be the way I look at this. The other thing you need to do, and I always do this as well, I guess I should have said this earlier, but I always go back in the intraday chart and I'll pull it back to the last time these guys reported, because you want to see what kind of moves happen when the numbers come out. And it's not always the same. It's not always indicative of what's going to happen, especially considering you have to take into account how big of the beat or miss was it. Was it a big surprise? Were people like setting the bar very low on this name and they were really surprised? And listen, if you guys want to know how to read the numbers that come out on earnings, True Trader's got a guy named Goose who used to be a market maker. It's kind of his specialty of like, he's very, very good at interpreting the numbers. So you guys come over, you can check him out. I think he's done a webinar on that very topic. So that's not something I'm going to cover in this webinar. This is just how to prepare for your different levels. So you can see off the numbers last time, it moved about 3 or 4 points, right? Up and down. And, then the next day, it kind of had some weakness off the open, and it had a very big rally. So that's just something to keep in the back of your head. What I really look for is what is the range when the numbers come out. That's what I want to know. So we were trading around 64 and it spiked up to 68. So 4 points, okay? Now, why do I want to know that? Because I want to take that and apply it to the daily chart where we're at now and say, okay, we're at 83, 84. Where's 4 points put us? Puts us right into these recent highs, right? So like if their earnings were coming out Monday morning before the bell, I may actually look to fade a spike right up into that pivot and that recent high, because it's done that before. It's spiked 4 points right into that level. So these are the kinds of things that go into making a plan, how I'm going to play this. And the same can be said for the downside from here too. So a flush down to 80. Well, what's that put us into? Puts us right into the daily, puts us right into the monthly pivot. So if the numbers come out and we were trading right here, right now, and this flush down to the 20-day, lost 4 points, I would probably take a stab at it. I'd probably be scooping that up for a bounce. Or if we pop right into 87, 88, I'm probably going to fade that at least for a quick move, and see if it want to leave a piece on and let it come back in a little further. Now, if you don't feel comfortable trading pre-market, post-market, that's fine. You can still use these same concepts for the regular trading hours when the market opens. So like we gap above this level, we don't really have other levels till the prior monthly pivot up there at 91, and then of course that level we point out around 95. And you take into account the range that this thing typically has on any given day, especially when you look at the range it had the last earnings day, right? 65 up to 70, call it 78. So quite a bit of range, right? 13 points of range on the last time they reported earnings. So that's another important point. Just because it trades 4 points of range on a typical day, this isn't a typical day, it's earnings, right? So last time it traded 13 points. I don't think 4 is going to be where we're looking on an ATR basis for the regular trading hours. Remember, that 4 point gap we were talking about wasn't from the ATR, it was actually from the prior earnings, what it did off the numbers, okay? Keep that in mind. Okay, so next, let's look at Walmart. They report later in the week, and one of the things I'll point out about Walmart is the importance of looking at higher time frames. I'm going to turn off the pivots for a minute here. And the weekly looks great, but the real setup was on the monthly. You can see the big pullback into the monthly 20, the push up, a higher low, and then the break. So the target on this setup is all-time highs. We're almost there, right? So a few things to note. It has already taken a breather from this big move up. So a gap over the all-time highs doesn't necessarily look as extended as it would have had this move just been straight up without this pullback. Also, it's the all-time highs are kind of to be expected since that was the target from the move. All of this is being said because there's one thing I'm trying to point out here, and that is Walmart's on a tear because it had a long trigger, a bigger picture long trigger. So yes, I may entertain a fade off this 154 if it pops off the earnings. But for me, the more enticing play is this thing missing earnings and giving a flush back into levels of support. And again, what I would do is look at the intraday, the action from the last time they reported earnings. So let's go back and look, zoom out. Here's their earnings report. Zoom in a little bit so you can see what happened off the numbers. So it closed the previous day around 140, 139. Numbers came out and it went from 139 up to 144. So 5 points off the numbers. So keep that in mind when we're looking at where this might gap off these numbers. We're at 149. A 5-point move is going to put us right down into 145, 144. We're right in this level. It's also right into a pretty key breakout area, right? The 20-day, the previous highs where it broke out from. So when I'm creating a bias, I'm using the daily chart and the monthly chart even here, and oftentimes the weekly chart to get that correct bias. I'd much rather be a buyer on flushes on a name like this than planning for the short on a spike. Now, again, I didn't say I won't entertain a fade off this if it were to shove hard 5 points. I think they report after the bell, right? So after the bell, numbers come out, shoves right up to 52-week highs. I may take a stab at that. Again, if you don't feel comfortable trading the after hours or the pre-market, that's fine, but you can make plans based on that. If we were to break above those levels, maybe get up into the 156 area, now we're looking at a breakout into all-time highs on a name that just triggered. I would be looking to, again, the path of least resistance is probably up, so I'm going to want to buy flushes back into support. It doesn't mean you can't fade that stock. It just means that you're probably putting capital at risk when things are just could statements versus should. So let's look at Target. Now Target, the thing I want to point out about Target is that this stock has not formed a base. This has just been in a constant uptrend since the last earnings. And you can see at one point it did have a nice little base build. It wasn't super long, it was a few months, but it wasn't, there's been no real base since back here in 2019 to that's 2020. It's the end of 2019 to mid 2020. We had a nice base. And from there, this thing's been pretty much just in this constant uptrend. So with these kinds of names, you can play whatever levels you're finding as the right levels to play, right? So it has the liquidity, it has the ATR. You can look at the history of the prior earnings and see what it typically moves. But these names don't interest me that much because there's no real base and there's no real resistance to gap into. Now, would I buy a flush into a level like a 240 or a 248? Yeah, but I don't think it's going to get there. If they miss earnings, this thing's probably coming down to like 255. I mean, unless they like completely way underperform, way surprised on the downside. What I'm really trying to illustrate with the Target daily chart is just the fact that when I see these and I'm looking for earnings plays that are juicy and interest me, that chart doesn't do it for me. Okay, so NVIDIA, they report this week. Now these guys have started to build a base. What I will say is that this base is very young. Look at the base it built prior to making this big move. This was from September 2020 till about, just recently. Actually, it was the real breakout was in May of this year. So it's a long base. And sometimes it helps to look at the higher time frames to see these bases and for what they really are. So you can see this big base here from 2019 to 2020 finally broke and we had a big move up. Another nice base broke, finally moved up. Look at the base we've built now. Not very long. Definitely not like these bases. So the reason I'm pointing that out is because for me personally, if this breaks out, I'm not really in the mood to try to chase this and look for continuations long. May it go higher? Yes. Of course it could. Anything can happen. That's just not what I'm super interested in. What I'd like to see them do is kind of miss earnings and give that the pullback into some levels so that this thing can go sideways for a few more months and build up that substantial base before making its bigger push up for the next leg. And when you think in those terms, right, that makes it so that you don't actually have to feel scared shitless to buy a big flush on a strong name like NVIDIA. If this thing flushes down to 178 off the numbers, or even better, like 170, but you can see these 178, 180s, very strong support from a few pullbacks. Here, you got the quarterly and the monthly. I'm not going to be that person that's like, whoa, scared to catch a falling knife, because I think that's what NVIDIA needs to have happen. I want them to miss on earnings and have this go sideways for a while longer, because in the meantime, this thing trades 6 points ATR. There's a lot of trades to be made on a stock like NVIDIA when it comes down to extreme areas of support or pops into extreme areas of resistance. It's a great trader. That's what I would like to see happen. Does it break out on earnings and go higher? Maybe. I'm not here to make those predictions. I'm just trying to make game plans for earnings. Staying with me. Here's the last one I wanted to point out was Cisco. And here's a cool thing about just constantly keeping levels on your charts is you can see I have levels marked already. That's not from prior to doing this webinar, like I better go prepare something. This is from earnings way ago. And every time Cisco has new earnings, I just drag these levels further to the right. And now I have levels of areas that I'm interested in, right? So we can see there's some serious resistance up here around this 58 to 60 area. So a big spike off the numbers into that level, I'm definitely interested in the short. Big flushes back down into these levels, I'm definitely interested in long. So you can see the daily chart on something like Cisco actually lends the ability to have nimble bias. You can be short bias or long bias. You can be buying the flushes, you can be shorting the spikes for, you know, mean reversion type plays. Now, obviously, if we get above all-time highs and it starts to go, maybe I'll look for pullbacks to areas of support to possibly be joining trend. But the real plays that I look for are the emotional moves into key levels. Because as long as it's emotional, which a lot of times the earnings reactions are, a lot of times those moves are not sustainable the first time they shove into a level. So I'm always willing to be there for that quick 2, 3, 4 point play, whatever it wants to offer, and then it can do whatever the hell it wants. So hopefully you can see the pattern here in the process. Earnings, it's a complex and deep topic, but I hope this is going to get you guys started finding your own profitable trades. You know, your knowledge journey should never really end. I've been trading 8 years. Hopefully I got another 20 in me. And I don't ever plan on not being a student of the market. So we actually have much more advanced content around these topics over at truetrader.net. So I actually hope to see you guys over there. Come over, drop me a line, join in, and let's all learn together. Peace.